Now, I want to segue again, into mutual funds and with very basic, basic kind of discussion around mutual funds, like mutual funds 101. Again, same example, a 25-year-old is starting to invest and he has no idea about investing. So mutual fund is a good option because it's, let's say, has a lot of diversification. It is easy to manage and all of that. But how one should, let's say, approach mutual fund? This is the first time he's investing.
The good thing with mutual fund compared to stocks is that in stocks you can go horribly wrong. You choose a wrong company, you choose a small cap. Right now the fashion is about SME IPOs and stuff like
Right.
that. You choose those companies, you can lose all of your money or a substantial part of it. In mutual funds, because you are getting to a diversified portfolio of 50 companies, the chances are that your 100 can become 90 or 80. It will never become zero. Or even the worst mistake if you do in mutual fund, you will still be okay. So a 25-year-old person, I'm assuming that person has a lot of time, so he should be aggressive. And if he puts in equity funds, first 5 years you should not really check the returns. And one thing I want to share with all our viewers is that when you're investing in an equity fund, suppose it is 100, you want to reach 200. Be prepared that first it will go to 80 before it touches 200. So you have to be comfortable with the 80 part of it. So if you can do that, I think equity fund, any kind of equity fund. See, if you don't understand any equity fund, you can just put in an index fund, which is BSE 30 or S&P Nifty 50. दिमाग लगाने का जरूरत ही नहीं है. Whatever the market returns are there, you'll make the same returns. But if you have more time, you can do little more research. There are, large cap funds, mid cap funds, small cap funds, or multi cap. Multi cap, you put your money in large cap, mid cap, and small cap. The fund manager decides it. So 25% in each category, the remaining 25% is flexible to the fund manager. So अगर आपको कुछ नहीं समझ में आता है, तो you can buy a multi cap also. Let the fund manager do the job. Again, there are 35 mutual fund companies. Of course, the returns will vary from the top performing fund to the bottom performing fund, and these rankings also change. It is very, very difficult to predict which fund manager is going to do good. Even the fund manager himself or that mutual fund company doesn't know whether our funds are going to do better this year or not. Nobody knows. Only in hindsight we know this fund was the number 1, this fund was the number 10. But if you have a mix of 3 or 4 funds in your portfolio, see, the logic is very clear. You have 4 funds, 1 fund will be the topper, 1 fund will be the bottom, 2 funds will be average. What do you have to make sense? On my total money, have I got the average returns? And if the average return is around 12-13% return, you are beating 98% people in this game.
Now, but what is Gajendra Kothari's approach to, let's say, picking a mutual fund? That, people would be a lot more interested to know.
Absolutely. So see, I've spent 20 years into markets, right? Lost a lot of hair, a lot of mistakes I did. But when I read people like Howard Marks, Warren Buffett, Ramdev Agarwal, I learned a lot of things from them. The first thing is buy right, sit tight, as in hang on there. Don't touch your portfolios unnecessarily. Don't churn, because the more you churn, the more taxes you pay. So kyun dena hai? So that is one. Second is be contra investor. If the whole world is going this side, you go this side. That's how you'll make money. Don't go with the traffic. Go against the traffic. So in 2020, when the whole world was panicking, I invested a lot of money in COVID in that March month. Similarly, in the sectors which have not performed well, like, I made a lot of money investing PSU funds in the last 4 years when the whole PSU wave happened right now. I made a lot of money in the auto sector fund when auto sector was not doing well. In COVID, I remember people saying that abhi kaun gaadi kharidega? Everybody will work from home. There'll be no cars, right? And people were saying abhi nobody will go for tourism, hotels sab khali ho jayenge because COVID is there. But see, people don't realize that this is temporary right now. This will change. So I want to buy a sector in mutual fund. See, I'm not buying a stock, Vishwas. I'm buying a fund. Right. I want to buy that fund which right now looks very pessimistic. Last 1, 3, 5 year returns are bad, right?
Yeah, that's the complete opposite. Most people are looking for कि 5 to 7 years की performance कैसी है उसके basis पे बस डाल.
और वो लोग तो लास्ट 1 ईयर का देखते हैं कि लास्ट 1 ईयर में अगर 100% रिटर्न दिया है तो दे थिंक इट विल गिव इन द फ्यूचर आल्सो. That is a classic mistake people do. In fact, if last 1 year return is 100%, in all likely next 2-3 years you are not going to make money, right? So I do complete opposite. The funds that have not performed well, I would look out for those funds and study the reason why they have not performed, right? If the reason looks valid, then I'll invest my money. I'll go for sectors that have not performed well in the last 1, 3, 5 years. I'll go for countries that have not performed well in the last 1, 3, 5 years. Like China is the case in point right now. So I'm quite bullish on China at this stage. More bullish than India at this point of time, in the sense, see, everything is good at a certain price. There's nothing good or bad, हर चीज का एक दाम होता है. So India today to me is little more expensive than its normal valuation. China is far more cheaper than its normal valuation. You have to have an open mind. And see, all along the way, I'll also make mistakes. The idea is to learn from these mistakes and then not repeat the same mistake again. So yeah, but if you broadly do all this stuff, keep it simple, don't diversify too much, as in don't have 20 funds in the portfolio. Most people again do a classic mistake. They buy 8, 10, 12, 14 funds. वो उसको पूरा zoo बना लेते हैं, right? They have bought the entire market. Then how they will beat the market? My suggestion to most of people would be that don't have more than 4 or 5 funds and be aggressive when others are defensive, and vice versa. That's the way to make money.
And a lot of people, also with regards to mutual funds, that they feel is key because there's obviously a commission involved in between, and there's a lot of debate around this. That even if, let's say, you're paying that 1%, it can make a big dent in your overall portfolio in a long-term game. So, what is your view on that?
So that's a very myopic view in my end. Of course, see, I'm a mutual fund distributor, so I have a conflict of interest also, which I must tell people. I'm not even looking at that. See, if I have to save that 1%, I could bypass the mutual fund itself and go directly into stocks, right? If I was that myopic. So मैं fund manager को क्यों 1% दे रहा हूँ? अगर long term में, if I can make 20%, fund manager is there for a purpose. 24/7, his role is to pick right stocks, which you and me can't do it. That's why you hire him to do that. Same way you have to hire an advisor to guide you which investments are relevant for you based on your goals, risk appetite, time frame, and there are hundreds of funds to choose from. His job is to find the right fund for your requirement. If you have chosen wrong fund by yourself, you would have lost 2, 3, 5% in this process yourself. I generally believe over the 20 years, yes, 1% will make a lot of difference. But if you are doing on your own, it's very unlikely that
you might even reach there. Like
you'll not even stay there for 20 years. You would have withdrawn. Like I remember I said in 3 years, my 50 lakhs became 47 lakhs. I was sitting on minus 2 lakhs, right? Most people would have exited then. That is where a right advisor would handhold you and say, look, don't do it. And because he handled you for next 8 years or 5 years, you were sitting on 2 crore profit, which was almost impossible for a common person on its own. That's where the whole difference.
I think the role of advisor is very misunderstood in the market, in India right now. And I think this will catch up. Like the way to see it is, like, for example, you need a doctor for your health. It's a similar kind of a relationship where you can, because we generally don't discuss finances in India. Like in the Indian society, you don't discuss it within the family. How much are we saving? How much are we investing?
And, I saw in one podcast, it was a very good analogy. See, in life, we all play different games. There are low stake games, there are high stake games. Low stake game is like ये t-shirt खरीदा आपने, right? You went to market, you liked it, खरीद लिया. अगर ये first wash में खराब हो गया, तो what is your downside? 2,000 rupees, 3,000, खत्म, you will forget. Right? What are high stake games? Wealth, health. If you have a fever, if you have chikungunya, would you like to treat yourself? You will go to the professional. It's a high stake game. Any mistake can prove you costly. Same thing, if you have 5,000 SIP, you can afford to do mistakes. But if you have 50 lakhs portfolio, you can't afford to do mistakes. It has become a high stake game. That is where you need guidance, you need advice.
Obviously.
See, today we are doing this podcast. Could we do this on our own? कि यार कोई कैमरा लगा दो, कर लेते हैं. The quality will not. We have to hire professionals. They know the stuff. They know the angles. They know the lot of intricacies that went on in becoming this thing, right? In every field, experts are required. And I always believe, go to the experts. You will have to pay price, but without it, you'll have to pay much higher price, and you will not have peace of mind. So decide what you want to have.
I think mostly we have covered everything. In the last, what I would like to ask is, what are the, let's say, the top 3 advices that you would like to give investors of all ages, especially with the current sentiment also, that you feel that Indian market at that time is, let's say, overvalued, or let's say the prices are, let's say, have gone through the roof. What kind would be the navigating strategy during this period?
So see, first thing I would say, start today, right? Not even tomorrow. I started late. That makes all the difference, right? So whatever you have, 1,000 rupees, 2,000, 5,000, even if you do a mistake, that's okay, but start today. To me, mutual fund is a more preferred vehicle because at least some level of professional fund manager is there. If you do on your stock on your own, it's most likely that you will make a lot of mistakes, right? And then increase your SIP or increase your investments regularly. Increase it. Just starting early is not enough. आपने 5,000 का शुरू किया, but 10 साल तक उसको बढ़ाया ही नहीं. What's the value of 5,000 after many years, right? So you have to keep increasing as per pace. Third thing, don't interrupt the power of compounding. Don't unnecessarily change stuff. Don't withdraw if you don't need money. See, what is the purpose of money? You need it when, it helps you when you need it, right? To buy an iPhone, which is a want, not a need, then don't break it. If you want iPhone, have a separate goal for iPhone. But don't break your retirement corpus and fund your iPhone. So this is there. As far as markets are concerned, see, markets will always be volatile. It is the nature of the markets. Markets will sometimes be expensive, sometimes be cheap, right? It is very difficult to time it. This
Hmm.
thing. I know today markets are expensive, but if I stop my SIP, markets can tomorrow touch 90,000.
Yeah.
Then I would have been completely left out. So I said, let me ride the markets with good and up. And in the long term, if I end up getting 12, 13, 14, 15% return, so be it. If I try to outsmart the market, most investors I've seen, they will not make the returns which even a normal market gives. They'll actually underperform the markets,
Right.
because you entered at the wrong time and you exited at the wrong time. So I would like to hesitate doing this. So that's why let your SIP continue. You'll have good times, you'll have bad times. In fact, in bad times, you should be more cheerful.
Yeah.
Be more aggressive. You should look those bad times as opportunities, those crises as opportunities. That's what will differentiate you from the rest of the crowd.
Thank you so much, for joining with us today and sharing with us.